I'm going to be talking today about full fat financial planning, which is a horrible expression. But if you're looking for a financial advisor, you should be finding out whether or not that's what they do. Full fat financial planning. Now, my guess is that it wasn't a marketing person who came up with that, or actually, perhaps it was, which is why it's such a horrible expression. What does it mean? Well, in our circles, in the world of financial advice, what it means is finding out exactly what clients want, and rather than just trying to flog them something to sort it out, which might have been the default solution in days gone by. I guess a bit like doctor throwing pills at you. What we try to do is dig beneath the surface and find out what's actually going on in your life, how that affects your financial life, and what we can do thinking longer term, holistically, another horrible expression I know, to help you sort it out. I thought perhaps a good way to explain a little more about what this means in the real world is to give you some real world examples from people I've spoken to and hopefully helped, or I'm about to help, in the past few days even, but certainly the past couple of weeks. So let me start with a fairly typical example. Someone who came to us by recommendation because they'd inherited some money, and they said, we want to put this away somewhere where it's going to work for us, don't want to be able to touch it necessarily, and help, please, let's invest it. I don't know anything about investing. Fairly straightforward. We could have said, okay, we'll take your 100,000 or whatever it might be and stick it into a combination of investments, put it away, forget about it, it'll do okay, make sure you've got enough in the bank, and Bob's your uncle. However, before we can do that, we really need to find out a bit more about what's going on in this person's life. And as with everyone, things aren't straightforward. There's a complicated family situation somewhere there. Most families are complicated these days. This person is thinking about retiring, doesn't want to fully retire, has got a mix of various pensions, was going to take all the tax-free cash out of those pensions, was going to take an income from some of it, carry on working with another bit of it, has bits of money in various banks and building societies, which they see as a good idea. Spreading it around surely spreads the risk, but blooming heck, it can make your life a lot more complicated. So what we focused on was, yes, helping with that investment, but putting the investment they wanted to make with the money they'd inherited in the context of everything else that was going on in their lives. That meant looking at all those bits of pensions, sorting those out, seeing what sort of income they would provide, not necessarily taking the money out of them now just because this person had got to what they considered to be the normal retirement age, because there isn't really any such thing anymore. Complicated family situations mean think about what's going to happen when you go. Look at your will. Have you got a will? What does it say at the moment? Was it made 20 years ago before things changed in your life, which is very often the case? If you're getting older, have you got powers of attorney? If you've got money, anything can happen. It may need sorting out and you might not be in a position to sort it out. Then we can look at what happens with all the cash bit being the first thing to consider. Having money in lots of different banks and building societies isn't necessarily a good thing. You can have up to 120,000 in one bank and it is protected. Premium bonds are a great idea. One account with some premium bonds for your cash reserve. It's very often a lot easier than 10 different accounts all over the place where you may get a bit of interest here, a bit more interest there, but you're going to have to be very nimble on your feet to sort them out, and most people haven't got the time. Bottom of the list there, really, of all the things we talked about, was sorting out some investment for that inheritance. Probably not the conversation that the client or potential client thought we should be having. But really, I think by having a different conversation, we did a better job for them. Another similar example was someone I spoke to just the other day who came to us because they wanted a new financial advisor. Theirs was retiring. This sort of relationship is often very personal, and it depends on the firm and who else is in the firm and how well they handle somebody leaving or retiring. But basically, they said, we just want to transfer everything over to you. We've heard you're great and have you look after it. Again, talking around what else was happening, they were actually on the cusp of thinking they should retire. Were again looking at having a mix of pensions, taking some money from this one, taking some money from that one, leaving this one, pulling those together and sorting them out and actually looking at what income they could be provided was really what was at the heart of their concern about having an advisor for the future. Again, they had money in different banks, building societies, a bit of a mess. They couldn't even remember what most of it was. Pulling that together and making it more straightforward will give them the confidence they've got enough cash to do what they like, go on holiday, because it's easily accessible and they know how much they've got. And again, lower down the list was sorting out the various investments that the other advisor had been looking after for them, because other things were more important. Again, the will question comes in, and many people who are concerned about their family don't think about making a will. We just say, we'll find you a good solicitor if you haven't got one yourself. So both of those, in my view, are examples of full-fat financial planning. We could, in both cases, have gone along and said, right, we'll take your money, we'll invest it, that's it, Bob's your uncle, job done. But what we're doing is, from our point of view, as a firm of advisors building a longer-term relationship, from your point of view, if you're a potential client, hopefully making you think about things which were muddled in the back of your mind and not an initial concern for you, you thought. At the younger end, we do talk to some younger people who aren't on the cusp of retirement. A couple in their 40s wanted to do some saving and build up their savings. An old-fashioned question, which probably goes back to product selling days, because a lot of us started off selling life insurance, was, have you got any life insurance? You've got children of school age, you want to build up savings, but you haven't got any. You're both working very hard to keep the show on the road. What happens if something happens to one of you? Very good question. Probably the next 10 years are the most important time until the children are off your hands. Bad news, that never happens, everybody. Plugging in some life insurance, which might cost 30, 40, 50 quid a month. Not a great deal for a couple earning maybe between them 60, 70, 80,000 pounds a year. Could mean the difference between survival and not survival of whoever's left if the other person doesn't survive or gets ill or whatever might be the case. So protection is a priority that we consider, a lot of people don't. So all of that is financial planning, full fat or otherwise. There's a lot more goes on in the background. We look at what we call cash flows, so working out how much money people will need, or you as a client will need to actually get where you want to be and survive that retirement which you want to have. However, the main principle is we don't just take an order. We have to find out what's really going on and do the things we can do to help you, which I think we do pretty well.